Hey everyone, I'm sitting down today with Tim Horst with Movement Mortgage, and he is shedding some light on the current mortgage environment that we're experiencing today, and also giving some tips for new home buyers on things that you can do to better prepare yourself for buying a house. Please subscribe to our YouTube channel and stay tuned for more updates on our local real estate market. Tim, thanks so much for sitting down with me today.
Thanks for having me.
Yeah, absolutely. So, it's been fun. We, as you know, just getting into the real estate industry together a couple of years ago. I really appreciate all the help that you've given me, and you've helped a lot of our clients out. And yeah, it's fun just continuing to live this crazy real estate life together.
Oh yeah, no, it's been a ride, and it will continue to be so. So
yeah, absolutely. So
looking
give
forward
us.
to it.
Yeah, me too. So you've had some changes in your world recently. So just catch us up to speed. What's new with Tim and the mortgage life?
No, yeah. So obviously there's it's a very volatile market, a lot of changes afoot. So my team, we recently made a move over to Movement Mortgage. So we're going to be focusing on growing north of Wilmington into Hampstead. So we're currently opening a Hampstead branch. We're fully up and running right now. But the focus is, we see a lot of growth potential within, Pender County and Southern Onslow County, and we really want to be growing with the community there. And we have a tremendous opportunity to help military as well as investors within that market. So we're excited about the opportunity.
Awesome. Well, congratulations on your move, and really excited for you and your team. And yeah, I agree. Hampstead is blowing up. I try not to drive there through Hampstead in the either mornings or afternoons anymore. So, cool. Well, switching gears a little bit to kind of the larger mortgage market. What can you tell us and our audience about what's going on in the mortgage world? It's been kind of a crazy year so far.
Oh yeah. I mean, if you compare right now to 12 months ago, rates have over doubled. It's become incredibly volatile day to day. We every week it seems like we see a little bit of improvement, and then by the end of the week it reverses, right? And I think that the important thing to think about is really educating yourself on the market, on what you're buying, and that allows you to be best informed with what the right decision is. From a market perspective, we saw an improvement when some of the inflation numbers came out last week. Yep. And then by the end of the week, the jobs report came back and it completely reversed. This coming week, we've got the Federal Reserve meeting, and then also the CPI, the other inflation indicator, coming out at the same time. So who knows what will happen? The important takeaway is, and I get this call probably a dozen times from prospective clients before a Federal Reserve meeting, which happens every 6 weeks, and everybody's freaking out because their agents or their friends or they're hearing on the news that the Fed's going to raise rates. The important takeaway is that the market prices in what the Fed is expected to do. The major shakeups happen when information comes out that the Fed's going to do something other than what the market expects them to do. Yeah. And right now, the expectation of the market is the Fed's going to raise 50 basis points. Okay. What does that mean for interest rates? Hopefully, nothing dramatic. It doesn't mean that rates are going to go up 0.5%. It could if they do something crazy. But the point is if the market if the market expects the Fed to raise 50 basis points, and that's what they do, well, Wall Street likes to be smarter than the federal government anyway. So it's probably going to maybe even see an improvement, right? Because the investors' expectations are being confirmed. Okay. And I think that's the biggest takeaway is just because the Fed's meeting and they're probably going to raise rates, that's them raising their internal rates, which are already pricing into the market. Yeah. And they've raised them substantially over this year. Yeah, no, absolutely. Well, that's super helpful. Thanks. We'll definitely be
watching the news this week and seeing what the Fed ends up doing. I have little faith in our government, but hopefully other smarter people than us are predicting what they're going to do well.
Yeah. That's why I said the Wall Street investors like to think that they're smarter than, than the Fed. So.
I hope, let's hope so. Cool. Well, when looking kind of more in like your team and in kind of the day-to-day of like the mortgage business, like what is some advice that you're giving to like your clients now that are, actively looking for homes and are facing, some internal concerns or fears about kind of the instability in our economy?
Yeah, absolutely. So, I mean, that's, like I said earlier, education is the biggest piece, and knowing what your budget is and what your affordability is. And and I've done this through my, the entire time I've been working in the mortgage industry, because a lot of times people can qualify for way more than they're comfortable spending.
Right.
Right. So I never want to be in the position where I tell somebody they can go buy, a $500,000, $600,000, $700,000 house, and then all of a sudden they see their payment and it's way out of their budget just because they could qualify for it. Right. So in this environment where rates are higher, where rates are changing, almost day by day, but they're not changing dramatically as they had been over the course of the last 12 months. The most important takeaway is the payment, right? The interest rate's a number, the payments, what you can afford on a monthly basis, right? So I always start when I'm having a conversation with someone, I don't ask them how much of a house they want to buy. I ask them what they're comfortable with on a monthly basis. And then what we do is we take that number and we extrapolate that out to whatever the purchase price is. Because if you let's just use this area for example. All $300,000 houses aren't created equal, right? If I tell somebody they can buy a $300,000 house in Onslow County, and then they go look at a $300,000 house on the beach that's got flood insurance, higher taxes, and so forth, that payment might be several $100s difference.
Yeah. So
the biggest thing I'm working with clients to understand is what their budget is, and then we expand upon that. So if you focus on what your payment is, and then you set your parameters of a search based off of that, and you realize that rates are high now. They're not as high as when our parents were buying houses in the 80s and the 90s,
right.
But that you're able to know that if you can afford the payment now, you're getting the house you want in hopefully 12, 18 months or so, when rates improve, you're getting the house for less than you're going to pay for it in a year. You can afford the payment now, and you're only going to be better off when you can refinance down the line.
Yeah. Yeah, and I think a lot of people buying now are looking forward to that.
Yeah.
I know we are. Yeah. So
I never like to have that conversation before somebody's bought a house talking about refinancing, but it's just the reality of the market we're in.
Right. No, that makes sense. And I think that's very wise to kind of, use the monthly payment metric as the deciding factor into like the picture for what the house will
exactly
look like.
And then you can, because a lot of times people will adjust that, and there's ways around that. There's some folks who are very sensitive to payment, right? They have a number in mind that they want to hit, and then there's ways to products out there right now that can help with that. I know it's been one of those items that a lot of lenders are talking about, buy downs, the 2-1 buy downs, 3-2-1 buy downs, things like that. Those are ways that you're not reducing the interest rate. You're basically prepaying the interest to have a lower payment for people who are payment sensitive. Now, personally, the way that those work, you're essentially prepaying the interest. So it's kind of, would you rather have more money in your pocket now or a lower payment? Some people want to have a lower payment. Other people want to have lower closing costs. It's just whatever suits that specific buyer for their needs.
Yeah, no, absolutely. Well, thank you so much for that information. Thanks for like the help that you've given Christina and I and our clients. And we'll definitely have to do this again soon. I'd love to do maybe a series about specifically the VA loans, as we're both in the military, before getting into this real estate profession, but also working with a lot of military friends to help them buy and sell. So
Yeah.
if you will be gracious and bless us again with your presence, then we'll definitely love to have you back.
All right. No, looking forward to it.
Cool. Well, thanks, Tim. Anything you want to leave us with, or where can, like, if people have further questions for you about mortgage stuff, where can they reach out to you?
Yeah. So the most expeditious way to get hold of me would be my phone number. So just I'm sure we'll put that in the comments, but 910-617-0440.
Cool.
It's my cell phone number. I always say that people buy houses when they're not working, so nights and weekends. I'm always available to try to help and get everybody into the new home.
Cool. Sounds good. Well, thanks again, Tim.
All right. Thank you.
Please follow us on YouTube, and thank you for watching. We love helping our community and helping others buy and sell real estate in this area. So please contact us below if you have any questions, and we'll talk to you soon.